So good morning everyone and welcome to today's session of Pre-Bell with William O'Neill India dated March 29, 2023. So before we go ahead, I would like to give a small disclaimer that any stock, any security that we might discuss in today's session should not be considered as a buy or sell recommendation, and we are just doing it for educational purpose. So without taking your much time, I'll start with Nifty 50's chart analysis for the day and for the past few days as well. So the people who have been following us know that currently the market status for Nifty at the moment is RA, that is rally attempt. That is Nifty has tried to attempt a potential bottom, this candle that is 16,250 mark, and is trying stayed above those levels for 3 consecutive days, 1, 2, and 3. Post that we need a follow through day to take the market to a confirmed uptrend, but we haven't been able to get that follow through day majorly because of global cues, plus as well as some kind of negative market sentiment, uh, Indian negative market sentiment as well. From the technical perspective, if we look at it, the green line, that is the 21 DMA, is started to move downwards or is started to show a downward trajectory. That means that your key moving averages are showing a downward trajectory, which is not a good sign. And similarly, you can see your 50 DMA also moving in a downward direction. So all of this is not a good sign. In a confirmed uptrend or when markets are going up, you need your key moving averages going up. Plus, even the crossover, if you look at it, the 21 has crossed your 200 DMA from the upside to the downside, which is not a good sign. You need crossovers the from your short-term key moving averages from down to up. That is, if this is your 50 or your 200 DMA, you want your 21 DMA to cut it from year to year. That is what you want. And going forward, that is what we like the key moving averages to do. Plus your Nifty to trade above these key moving averages, such as your 21 DMA, 200 DMA, and your 50 DMA. Going forward, your 100 DMA as well. And in between that, if you get your follow through day, nothing like it. But on the flip side, if Nifty again breaches your 16 to 50 mark, then markets will go back to a downtrend. Talking about key news, uh, your FI became net buyers yesterday to a big tune, that is 1,531 crores. DI were net sellers for 156 crores. So our RPP Infraproject got work order worth rupees 148 crores. Uh, Government received 1,355 crore of dividend tranche from GAIL. Jindal Stainless acquired 49% stake in Indonesia-based nickel pig iron company for $157 million. GR Infraproject got another project worth rupees 587 crores from East Coast. DCB Bank to allot tier 2 bonds worth rupees 300 crores on private placement basis. And LCD LNT, that is Larsen & Toubro, to issue NCDs worth rupees 2,000 crores. Talking about the global market update, your US markets were pretty much on a muted note. Uh, Post your volatility in the market because of the Fed's reaction, your Powell's comment, then your the other market participants' comments as well. Your US market has kind of became very muted post that, and yesterday's movement was also similar to that. Dow going down by 0.1%, S&P 500 by 0.2%, Nasdaq by 0.5%. Similar action was muted action was seen in the Asian markets as well, and Shanghai went down by 0.2, Kospi higher by 0.4, Nikkei lower by 0.1%. Talking about SGX Nifty is giving a flattish to positive opening. Yesterday, last close was around Nifty was around 16,950 levels, and SGX is indicating somewhere around 17,000 levels, which is 50 to 55 points higher. But considering the last few days action, if you look at it, Nifty has been very the action given by Nifty is pretty much muted in the last few days. Uh, However, considering your uh, FNO expiry being very close, you can see some kind of volatility as well, but not much is what we are expecting. So talking about the sector view, I mean, as you can see, most sectoral indices are either in under pressure or correction or in the rally attempt mode. And similarly for your mid cap 100 and small cap 100 is also you can see that the indices are under correction mode. Apart from energy, no other indice is in the rally mode. And FMCG is the only one that you can see is probably holding above the 200 DMA. All the other indices have gone below the 200 DMA, which is not a good sign. Even your energy being in rally is still 11.8% below the 200 DMA. Even realty has got a major hit, and as you can see, even that is trading 12.6% below the 200 DMA. And if you talk about from a 50 DMA perspective, then all your indices, I mean, FMCG is marginally below the 250 DMA, but all other indices are pretty much down from the 50 DMA perspective as well, at least 3.5, 4% to even 9 to 10%, which is not a good sign. And even on Nifty, that we saw that there are many crossovers on the downward side, that your 50 has or your 21 DMA has crossed the cut down your 50 DMA or the 200 DMA from the upside, which is not a good sign. So going forward, we need to just not just look at the Nifty 50 or the BSE Sensex, but the broader market indices plus the sectoral indices as well, to look at which sectoral indices are pretty much forming the bottom first and which sectoral indices can turn out to be winners going in the long run, going forward in terms of their setups, their leading market stocks setup as well. So, thank you and stay tuned to the space of Prebell with William O'Neill India, and do connect with us at 8:45 a.m. sharp from Monday to Friday.